Are you feeling the pinch of rising unemployment and volatile markets?
That's right. With insights from experts like Danielle DiMartino Booth, we aim to uncover these pressing issues.
We've distilled their extensive research into concise summaries that save you time while keeping you informed.
So stick around as we explore unemployment exhaustion and its impact on our economy.
And don't miss our analysis of the surprising state of the housing market based on new Zillow reports.
Plus, we'll delve into Federal Reserve policies and their implications for your investments.
Today we're discussing insights from Danielle DiMartino Booth regarding the issue of unemployment exhaustion affecting Americans.
Danielle notes that many Americans are increasingly fatigued by prolonged unemployment, significantly impacting their job-seeking behaviors.
Danielle DiMartino Booth highlights that extended unemployment leads to significant fatigue among job seekers.
This exhaustion discourages workers from actively pursuing new job opportunities.
Danielle emphasizes that this phenomenon has implications beyond individuals, affecting the broader economy.
Danielle stresses that prolonged joblessness can adversely affect mental health and overall well-being.
This concern is particularly pressing when considering the reintegration of affected individuals into the workforce.
According to Danielle, changes in the labor market are evident as exhaustion influences interactions between employers and job seekers.
This scenario creates challenges for companies looking to hire, as they may encounter a disheartened candidate pool.
What does Danielle predict about the future of employment as these trends unfold?
She anticipates that continued unemployment may hinder broad economic recovery unless significant policy changes are enacted.
What policies might assist in this effort, according to Danielle?
Danielle believes that innovative solutions are vital to re-engage those affected by unemployment and mitigate their exhaustion.
In conclusion, Danielle asserts that tackling unemployment exhaustion is essential for maintaining economic stability.
She emphasizes that without proactive policies, the challenges of unemployment will likely persist, affecting individuals and the economy at large.
Next, we discuss a surprising report from Zillow indicating that a notable percentage of houses are now underwater.
Industry experts highlight the key factors leading to this change, raising important questions regarding future market dynamics.
According to Reventure analysts, a significant percentage of homes have negative equity, indicating owners owe more on their mortgages than their properties are worth.
This shift may lead to extensive ramifications in the housing market, affecting buying strategies. Reventure analysts outline how negative equity limits homeowners' options, often trapping them in their current homes.
This situation raises alarms regarding the potential rise in foreclosures, especially with interest rates projected to increase. The report indicates that an increase in mortgage rates could dampen buyer enthusiasm, possibly cooling the market.
A higher inventory of homes may result in falling prices, a trend that Reventure analysts are diligently monitoring. Industry analysts warn of substantial fluctuations in home values moving forward, alongside a likely increase in homes for sale.
Such developments will shape the housing environment, making it crucial for both buyers and sellers to stay updated. Takeaway from this analysis: home buyers should engage in comprehensive research prior to making buying decisions.
Sellers must be prepared to navigate an evolving market as conditions continue to shift.
Welcome. Today we delve into the latest insights from George Gammon regarding the Federal Reserve.
George illuminates the potential impacts these revelations might have on the economy and inflation.
George argues that inflation is being affected by various policies from the Fed.
He emphasizes the importance of managing interest rates to avoid recession risks.
George points out that current inflation exceeds the targets set by the Fed.
He believes that recent policy changes may not be sufficient in addressing the rising inflation concerns.
What's George's perspective on the regulation of interest rates by the Fed?
George cautions that a swift increase in rates could impede overall growth.
George mentions that investor behavior is significantly influenced by the Fed's policies.
He warns of potential market volatility as a consequence of these decisions.
What are George's expectations for future inflation and rates?
George predicts ongoing market volatility amidst continuing inflationary trends.
George suggests investors stay alert to Fed news, as it greatly influences market dynamics.
He highlights the necessity of tracking inflation data for sound investment decisions.
Next, we'll dive into insights from John Smith, who has analyzed recent stock market anomalies.
John highlights unusual trading volumes and changes in investor behavior as key indicators of market sentiment.
John Smith believes that the recent anomalies may signal broader shifts in the market.
He notes that current trading volumes reflect heightened volatility, indicating uncertainty among investors. John explains that heightened trading volumes often precede significant market movements.
So, the more trading, the higher the likelihood of a market direction shift.
Exactly. Investors should stay vigilant and cautious during these times.
What does John say about investor sentiment in light of these anomalies?
According to John, emerging sentiment among investors could trigger short-term corrections.
That suggests a level of fear when investing.
Absolutely. Behavioral trends indicate a growing concern among traders.
What predictions does John make for the market based on his analysis?
John forecasts continued short-term volatility in the coming weeks, with potential corrections on the horizon.
And if the current trends persist,
traders may see significant shifts depending on how these anomalies play out.
John suggests that investors closely monitor market trends to adjust their strategies.
He also highlights that diversifying portfolios can mitigate risks during volatile times.
Staying informed and flexible appears crucial under the current market conditions.
Exactly. Adapting quickly to changing environments is essential for any investor.
Today, we're analyzing insights from economic analysts at Eurodollar University regarding the current economic situation.
The analysts point out significant shifts in consumer behavior that could reshape market dynamics.
Analysts indicate that inflation is disrupting consumer spending and pressuring businesses.
These trends suggest instability in the economic landscape.
The highlighted changes in consumer spending show increasing price sensitivity.
As consumers adapt, their spending behaviors will fluctuate.
The analysts conclude that inflationary pressures are extensive across the economy.
Predictions suggest that inflation will continue to be a critical concern in the market.
Experts warn that if trends persist, a recession could loom due to a drop in consumer spending.
Moreover, sustained inflation may erode purchasing power, further complicating the economic situation.
Ultimately, households need to reevaluate their finances to adapt to the current economic climate.
Policymakers are urged to implement strategies to overcome inflation's negative impacts.
Today, we're delving into the analysis of unemployment trends as discussed by Danielle DiMartino Booth.
Danielle highlights the troubling statistic that many individuals are facing dire economic challenges.
Danielle DiMartino Booth discusses the prevailing misconceptions about current unemployment figures, suggesting they may be significantly understated.
She indicates that numerous individuals are facing financial exhaustion and a decline in savings. Danielle emphasizes that many of the unemployed feel they have very little left, highlighting significant economic fallout.
Is it primarily about losing jobs, or is it more about how fast people are using up their savings?
Exactly. This rapid depletion can lead to long-term socioeconomic issues.
What insights does Danielle provide regarding government assistance programs?
She critiques the government's response, arguing that it falls short in addressing the long-term recovery needs of the unemployed.
Danielle predicts ongoing struggles in the job market with persistently high unemployment in certain sectors.
Her insights suggest that without significant policy reforms, recovery may take longer than expected.
Danielle concludes that individuals must reassess their financial strategies to effectively navigate future economic challenges.
She underscores the significance of being informed and prepared among job seekers and homeowners facing this difficult landscape.
What an enlightening conversation we've had today.
Indeed. We've seen how Danielle DiMartino Booth laid bare the struggles surrounding unemployment and the economy's fragile state.
Right. And it's quite alarming how she discussed the insufficient government responses to these issues.
Absolutely. And then we heard from the economic analysts who emphasized how consumer behavior is critical in this inflationary environment.
It's fascinating, isn't it? They all agree on inflation being a persistent challenge, but they have such varied perspectives on what's driving it.
Exactly. And speaking of varied perspectives, John Smith highlighted some unusual stock market patterns that present both risks and opportunities.
That's intriguing. And George Gammon shed light on the Federal Reserve's impact on inflation and interest rates. Definitely a topic that investors should pay attention to.
For sure. And let's not forget the Reventure analysts who surprised us all with the alarming stat about underwater homes.
I didn't see that coming. It certainly adds another layer of complexity to our understanding of the housing market.
So, with all these insights, it's clear there's a lot to consider moving forward.
If our viewers found this discussion as insightful as we did, make sure to hit that like button and subscribe.
Your support means we can continue bringing you these expert analyses.
Don't miss our next video where we'll dive into global economic indicators that can affect your investments.
Thanks for joining us today, and see you next time.